All right, let's get in the next one.
What for 2025? Andrew Graham, CEO, Jackson Square Capital, and Michael Robinson, tech analyst, are both with us. Andrew, I'll start with you. I mean, when we look at the Mag 7 names, not too shabby. Sure, maybe some are off the highs, some are still hitting highs. Are they still the Magnificent Seven as you know it, Andrew?
Yeah. They're still the Magnificent Seven. I think the story here behind the scenes is that if you look at consensus earnings estimates, these stocks are going to have 18% earnings growth in 2025, but that's down from 33% earnings growth last year, whereas the other 493 stocks in the S&P are expected to have 12% earnings growth, which is up from 3% last year. So you have this narrowing differential between the two. With last year, it was 30 percentage points. It's now going to be 6 percentage points if we take consensus at its word. And I think this narrowing of the earnings growth differential, it might take some people by surprise. There's going to be more upside, I think, in the 493 as they sort of catch up a little bit.
Yeah, I'm going to ask you how you would go about playing that, because they think about the triple Qs or looking at the individual names. Michael, how about you? How do you feel about big tech for the new year?
Feel pretty good about it. I think, we talked a year ago, almost to the day, and I said big tech would obviously be a major focus of the market, probably dominate it, and that's what's happened. Nicole, we have a new paradigm here. We've only been 6 years ago, there was no $1 trillion market cap for any tech company. Today, you have 7 of those. And 3 or 4 of them are like more than $2.5 trillion in value. So just that alone makes those few right there are obviously dominating the market. I do think we're going to see a little bit of slowdown. You're already starting to see it a little bit in some of the Mag 7 stocks. Microsoft and Apple are up for this last 3 months of the year here, about 10%, whereas NVIDIA is up more than 35%. I do think you're going to see money moving into other big tech names that haven't been as famous. They're not like Salesforce is really up a lot in the last 3 months. They had a very strong third quarter report. And they also have a new AI initiative, Agent Force. That stock is doing very well. Another company, it's only about $180 billion market cap, but Palantir has just been killing it. It's up something like 130, 140% just in the last quarter. I don't expect that kind of momentum to sustain all through 2025, but I think people are starting to look beyond those obvious famous names where a lot of money is being invested in AI, and they're looking at other players who may be involved in AI but may not be yet so big. One other good thing for big tech right now is with the new administration, they're going to be, I think, a little bit less persnickety about just big tech in general and stopping the mergers and acquisitions. So I do think we'll see some bolt-on acquisitions happening in the big tech space, maybe acquiring smaller players that add a lot of efficiency and more growth. And to Andrew's point, they're going to want to keep their earnings per share growth high. And you'll do that partly with some bolt-on acquisitions because of the efficiencies.
Yeah. And Andrew, how would you go about playing tech for 2025? What would you be buying, or how would you maneuver?
Yeah, so last week's software results, I thought, had evidence of this sort of a ramp in AI-related revenue. We've been going through this valley of disillusionment, I think, when it comes to AI and people's thoughts around where's the ROI on AI. And I think it came through a little bit in some of those reports mentioning Salesforce and a few others. So that's a place where we want to be. I think software in general kind of fits with the overall macro backdrop and maybe the incoming administration. We're talking about tariffs and so forth. Software is not subject to tariffs like semiconductors are. We've seen some of that rotation go on. But I think, within the Mag 7 names, Amazon's our favorite coming out of reInvent. I think they've narrowed the AI gap and with their own silicon and Trainium 2 and the foundation model they have at Bedrock seems to be working very well and very popular, breadth of LLMs and so forth. That's our number one pick there. We also have an honorable mention or two.
You also had a thought on Tesla. Winner or loser? What do you think?
So
Andrew?
yeah, we define the Tesla investor or whatever world as haters and doubters and true believers, and we are in the we're in the doubters camp, and we're trying to come around to believing a little more. Their FSD 12.3 version 12.3 was a step function increase in in their miles per critical intervention. There's 900,000 users now that have it fully capable on their cars. And FSD 13 is the first version to be trained on the Austin supercluster. And I think that once you get to sort of MPCIs close to what Waymo is, and I think there's indications that they're going to be there on the version 13, you're going to have this robo-taxi thing become more of a potential reality, and that's much fatter margins than selling cars.
Yeah, and this week we have Broadcom, Oracle, Adobe. Anything about this week that might stand out to you, Michael, quickly?
Not any one particular one. I try not to trade anything based.
So let's say there's like a continued worry in the market around the AI payoff, right? Is AI going to pay off, and those sorts of things? Like, let's say that's an overhang on all these stocks for the next 6 to 12 months. So then you got to ask yourself, where does money move? Because money's going to find places, money's got to make money, right? And let's say it's not really necessarily short in the market, because let's say the market doesn't tank in the next 6 to 12 months. So let's say we got the big cloud about worries about, are we getting the payoff? There's no major crash. Where's the money go? I'll tell you where the money goes. The money's going to go into a lot of these sorts of stocks, right? The Celsiuses, the Estee Lauders, right? The Wynn Resorts, Elf, a lot of these sorts of companies that are maybe some of these smaller caps, like a SoFi, right? Honest, Cake, Revolve. I think a lot of the small caps is what really catches the money, and where money ends up rotating, where people look to make money, right? Because then those ones, if you can have a little more certainty around the economy and more confidence in the economy in general, that usually means Russell 2000 is going to roll, right? Especially if you don't have a worry about rates going up. So if you have rates likely going down and people viewing the economy and the consumer as stronger, where do you want to pile into? You want to pile into the Russell in that environment, right? And so then you get a big rally in the Russell stocks. You get a lot of those stocks to move huge, while the big techs are kind of just lagging a little bit, right? Just chilling out. And so it's a potential, and I think it's something everybody should be aware of. I actually root for that potential. I would hope that potential, even though I own many of my biggest investments or many of the big tech companies, like Meta, Amazon, Tesla, I wouldn't mind if those stocks chilled out for 6, 12 months. I would not mind it at all. And additionally, being an AMD buyer right now, I wouldn't mind if that stock chilled. I do think I have to move with urgency on that. I think I got to acquire shares pretty rapidly over this next 2 months, but we'll see. Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000xstocks.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in? Or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com. Let's get into these guys. Let's react.
Angela Mwanza and BMO Capital Markets, Brian Belsky. It's great to have everybody with us. Angela, I'll start with you. Just to segue off of what we were talking about with tech, I suggested that this space has woken up lately. You still like it into the new year?
I still like it into the new year, and I'd say, Scott, the question we're getting from clients the most when they see numbers like this is, are we looking at an overvaluation? Is it time to take money off the table? Is this a risky situation that they're finding themselves in? I think the question there has to be, it's a high evaluation, but does that mean it's actually overvalued? And for us, when we look at mega cap tech names...
Hold on for a moment. Let me answer this question. Is it time to take some profits? Listen. There's no shame in the game. You made a fortune last 2 years in certain stocks, and you feel like their valuations aren't super attractive anymore, and you feel like it's going to be harder to get gains in those stocks based upon where their forward Ps are at, versus where their net income's going over the next few years. Take some profits. No shame in that game. I've taken some profits here recently in the fourth quarter on a couple different stocks, right? Respect. Nothing wrong with that. And then if you want to deploy that money somewhere else, do it, right? You know, there's a lot of stocks that I've held for many, many years that have now made me tremendous amounts of money, and I'm taking profits, and I'm redeploying that money into other opportunities I see in the market that I think are going to be much bigger opportunities, because not all stocks are going to be respected at the same exact time. There's certain unbelievable opportunities I spotted in the market 2 years ago, 3 years ago that I invested heavily into, right? And those stocks have obviously expanded their valuations massively. And now there's other stocks I'm looking at out there, and I'm like, this is a big opportunity, this is a big opportunity, this is a big opportunity. And you see me investing into those now at this point in time, right? So, yeah, like, don't ever feel shame, especially if you've been holding the stock for several years and you've made a fortune on it, and the valuation is at a place where it's like, it makes sense to take some profits here. Don't be ashamed of that. There's no problem with that. Where people have issues is some people buy a stock and a week later they're already trying to sell it. A day later, they're already trying to sell it. A month later, it's like, what are you doing, man? You know, if you're making those short-term decisions, you're likely not doing enough research work before you go into there, or you don't really have confidence yet because you're super new to the market.
We want to rebalance out of it. We want to take away some concentration in the portfolio, but we still think that has legs. If you look at the last 6 months in the S&P 500, this Magnificent Seven has actually lagged the S&P 500. So you're seeing a broadening going on within the markets, which means for us it takes a little bit of risk out of the market and gives us more and more opportunity. And I think they're great other places to be investing as you trim some of your large cap, your mega cap tech names.
Liz, you've really had a tale of two tech groups. I mean. Mm-hmm. The meltdown, as we've been calling it, in momentum, which has encapsulated a lot of other high growth tech names, AppLovin, for example. These stocks that yesterday really rolled over hard. So you got to be careful in the way you talk about tech as a sector. Mega cap seems to be performing better. These things now, after a massive run, some of these stocks are up 900%, right, or the like year to date. Had a really tough day yesterday, and some are down again today.
Yeah, I mean, some of them, you look at the chart, even a 1-year chart, and try to convince yourself to buy after you see the line go from the bottom left to the upper right so strongly, it gets difficult. I'm going to steal a talking point from Mr. Belsky before he even gets to talk today. Some of these mega cap names are what people consider the new consumer staples, and that's something that I think people have looked to in periods like this. The month of December, month to date, we've seen this pretty big reversal in just factors, right? Momentum is performing poorly compared to how it had done earlier in the year.
I mean, it was doing great until yesterday. And then all of a sudden you had a rollover. Like I said, the Palantirs of the world, the AppLovin isn't down another 6% today. It was down huge yesterday. It feels like something's going on.
It's crazy to me. It's crazy to me in regards to Palantir specifically. This is wild, man. Like, it seems like it wasn't that long ago, like, Palantir almost never even got mentioned, right? And, like, to now hear it be, like, talked about on a regular basis when people are talking about Meta and talking about Google and these other stocks, right? And I hear Palantir, like, I have CNBC on while I'm working in the background all the time, right? And I'll be half listening, and, like, I'll hear Palantir. And it's just crazy because it was, like, you go back 2 years ago, who was talking about Palantir on CNBC 2 years ago? Give me a break, right? And, like, to see the change now, and it's like every day you're going to probably hear the name brought up on Bloomberg and CNBC several times a day, especially now that they're in the NASDAQ, going into the Qs, right? Or excuse me, and now they're in the NASDAQ and the Qs, right? But also in the S&P 500, best performing stock in the S&P 500. So it's just wild how fast things can switch from just no one talks about it to all of a sudden it's like mainstream financial media.
And I think that there's a rotation of those factors. So it's not just momentum that's seeing it. Low volatility stocks not doing well in December compared to how they've done earlier in the year. And then you look at the other end of the spectrum and you've got things like growth and liquidity doing really well, and they didn't do so well for the first part of the year. So I think there's a rotation happening partly because we're at the end of the year. People are taking some profits. They're trying to reallocate their portfolios, getting ready for the new year. And because we had this big burst of optimism and this big burst of buying post-election that probably needed to cool off a little bit. So the beneficiaries of that are perhaps taking it on the chin a little. The other thing I would say, especially about tech, is it's not all going to be equal going into the new year. I think we'll have a similar story to what we had in 2024, where some of them are going to look great, some of them are going to look not so great, and you have to be choosy about it. I'm choosing to break up the universe into semiconductors versus software, and I'm much more bullish on software in 25.
Alrighty, much more bullish on software in 25. I think that's kind of where a lot of people are at, right? More bullish on software. But I don't think you should necessarily cast away some of these semi stocks, especially if they keep going down, right? Obviously, I'm insanely bullish about AMD. I've talked about AMD a lot in the past week, specifically on the main channel. If you don't watch my main channel, Financial Education, type it into YouTube. You can watch some videos I put out recently. Several videos in the past week I've talked about AMD stock specifically, right? Even yesterday here on the Reaction channel, if I recall, I spoke about AMD stock, right? Incredible opportunity to be buying over this next, month or next few months here in regards to AMD, right? But even Nvidia now, if that one keeps going lower, I wouldn't throw away Nvidia either. I thought Nvidia might exit this year between 150 and 200, right? And probably closer to 200. And now it's looking like that's pretty unrealistic now at this point in time. Right now it's looking like who knows where it's going to exit the year, maybe between 120 and 140, maybe it exits the year, right? So that creates some potential, I think, upside next year for Nvidia. I don't like it nearly as much as AMD. I feel much better in AMD than Nvidia, but even that one, I'm like, there might actually be opportunity in Nvidia as well. So you could actually do a combo buy of buying Nvidia and buying AMD, right? So I wouldn't just give up on all the chip names. But I would say if you're gonna buy chip names, I would lean toward Nvidia. I would lean toward AMD in that sort of environment, right? Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000xstocks.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in? Or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com. Meta Platforms. So this is a company that so far returned. Keep in mind they went public back in 2012. Their return so far since 2012 is up 1,359% for this company overall. Now, I got to take you back to when the company went IPO in 2012. So I was around back in those days, right? Investing in the market. And I actually bought Meta stock. It went IPO around $38, and I bought it when basically the price crashed down to like $18, $19, and I bought it at that level. And unfortunately, I made a little bit of quick money, and then I sold out. Bad decision in regards to that back in the day. But Meta back in those days, people were calling it the next MySpace. They're like, well, they knocked off MySpace. Who's to say somebody's not going to knock off them? And that was like the big thing back in 2012. They might be the next MySpace. Obviously, they were not the next MySpace, and they still, somehow to this day, going into 2025, they're still growing. It's insane, right? And then people were asking, like, how are they going to get money? So right from the go, people never understood this company. Right from the day they went IPO, they're like, oh, they're going to get disrupted. How are they going to make money? They never understood it. Then shortly after they went public, Zuckerberg makes a crazy acquisition. People were like going insane over this. Mark Zuckerberg bought Instagram without really asking the Facebook board of directors. And this was a huge deal because you got this 20-something kid who's, at that time, I think he was the youngest, richest person in the world, right? And they're like, is he insane? Like, this is so dumb. He spent $1 billion on some random app that people are sharing photos on. This is crazy, right? Now we look back at that going into 2025, and this was one of the most genius business acquisitions in the history of mankind, right? And the way he integrated that with Facebook back in that day, and those kind of fed off each other, was nothing short of historic, right? And if Instagram was a standalone company, my guess is that would be worth $150 to $250 billion just by itself nowadays, right? I think he knew what he was doing, but that was not really understood, right? You're gonna see a common thread with people don't understand what Zuckerberg is doing, until the money comes in, and then they're like, oh my gosh, like that was genius. Like, how did we not see this? Is a common thread here. Same thing happened when he bought WhatsApp, which some people looked at as even a crazier deal. $19 billion for some service that people are messaging on. How are you even going to make money from that, right? And by the way, the money's just starting to pour in regards to WhatsApp. The big money's actually coming over this next 5 to 10 years in regards to WhatsApp and that opportunity. But people didn't understand that. They're like, I don't get it, right? And then they integrated messaging services into all their other apps. I mean, it was another brilliant acquisition by Zuckerberg, but people questioned it at the time, right? Then there's metaverse. People questioning this left and right over the last number of years. Like, I don't know about this. Like, who's doing this metaverse stuff? But I got to say, a lot of the youngins, they love it. A lot of the kids love these products, MetaQuest 3S. And it's clear as day, Meta is the leader in AR and VR, and they're so far above the next closest competitor, who I guess you could say is maybe Apple. It's unbelievable how far Meta's ahead of those guys in regards to what they have going on technology-wise, the price point they're at. It's ridiculous, absolutely ridiculous, right? Now, Meta's next thing that people don't understand right now is the Llama AI models, right? And if you're in the industry and you're in the know, you know, like Llama is like a dominant AI platform essentially at this point in time, right? Meta's next Llama AI models are training on GPU clusters bigger than anything else. Meta Llama has become the most dominant platform for building AI products. So once again, Zuckerberg's ahead of the trends. People don't understand what's going on. In 5 to 10 years from now, people will look back and be like, oh my gosh, like Meta built Llama, like that was so genius. How did we not see how much money they're going to make off this and how genius that was, right? So you have a common thread here. Now, this is very important in regards to Meta. And if you're talking about a stock that you want to hold for decades, this is huge. Zuckerberg, he's 40 years old. And honestly, he does not seem at all interested in sailing off in the sunset anytime soon. So you got literally a business genius, the most misunderstood business genius in history, maybe, who's leading this company for a long time to likely go in the future. I mean, that's a pretty darn good, company. I'll say that when you got a guy like that leading the show. By the way, I was kind of curious, so because I typed in Mark Zuckerberg age into Google, and I was like, let me just type in Jeremy Lefebvre age, and I just want to see what came up. And I found this down here, this called famous birthdays, right? So I click on this. And this is I laughed so hard when I read this, right? I looked down here, and it said associated with. In 2019, Donald Trump posted a tweet that he watched one of his stock videos and that it was one of the best videos of the year. I'm like, what? Like, where did they get that from? Like, what are we talking about here? Who knew Trump was a big fan of the channel? Oh, man. I was cracking up as I read that. Come on, man. So, back to Meta. It's a huge position for me. It's $1 million plus. I feel very comfortable holding the stock. It's the big dog position in the public count, right? Public count now $3 million. $1 million of that $3 million is Meta stock, right? The gains are $841,000. They're now paying a dividend, which makes the stock even more attractive because now essentially every 3 months Meta's going to be paying out dividends. And guess what happens with Meta? Their profitability just keeps going up and up and up, and likely is going to keep going up for the next several decades, which means the dividend they're going to pay out is going to be bigger and bigger. I wouldn't be surprised if I hold all my shares I have in the public account right there. I wouldn't be surprised if 10 years from now, I'm making tens of thousands of dollars a year, if not hundreds of thousands of dollars a year, just in dividend income per year from Meta stock. I would not be surprised at all because they're going to be able to up that dividend amount so substantially over this next decade. It's ridiculous. So the moral of the story is, yes, Meta, another one of those buy and hold stocks. Tesla, very special company, up 28,000% since IPO. Listen, there's a reason I call my house the house Tesla built. I was able to take so many incredible profits out of Tesla over the years. It's ridiculous, like incredible stock for me. With that being said, even with the insane profits I was able to take out of this stock over the last number of years, you notice I never sell out of Tesla completely. I always leave a good chunk. And so although I sold, by far and away the majority of my Tesla shares because the valuation has gotten so rich, I still refuse to sell it all. I still hold $357,000 worth of stock in the public account. It's still a position I hold in the Patreon portfolio. I can never sell out of this one completely because at the end of the day, they just stay, even though the company, you can make an argument that it might be overvalued and those sorts of things, it's still one of those companies you got to hold shares in, because this is a company that's in the forefront of technology when it comes to self-driving, when it comes to electric vehicles, when it comes to energy storage, batteries. Like, they just keep pushing the pedal to the metal. They got one of the most insane engineering teams you're ever going to know. Like, I've been fortunate to know some of these engineers at Tesla over the years, and I just tell you, they're all brilliant. They're all brilliant, like unbelievable folks. And so it's very hard to compete with them. Elon Musk, I mean, he's got a lot on his plate, and I'm sure if he just dedicated himself to Tesla, I'm sure Tesla would be even further along than where it's at. But, you know, it's unfortunate, but he has a lot of other priorities as well, right? So that is just something to keep in mind here. But the moral of the story is I would still rather have him be a CEO of the company, even if he's not fully engaged because he's doing other companies, than not. And so it's one of those stocks you just always got to hold shares of. Like, you know, if you can make a bunch of money and you want to take some profits, cool. But this is just one you never sell out of completely. You can never sell this one complete. You always got to hold shares, man. But Tesla's a very, very special company, and it's a very special stock.